Warning, this is all financial advice. You can invest in any way that will make you feel comfortable. This is just a full breakdown of the stock to help you invest into a company that will help you grow your portfolio for the long term. Thank you.
It's time to hone your skills. You'll certainly need it.
Yo, what's up, guys? It's your boy Kool-Aid Man 100X. Welcome to Black Money. How you guys doing? Black people, listen. We're going to be doing a review breakdown of Amazon. I've been wanting to do this for a while myself, see what's under the hood with Amazon too as well. So the first thing we're going to do is look into the company they put out, if we put something in. So we definitely got to look at that as well. So as we can see here, Amazon does not pay any dividends. They don't, which I'm very surprised. They actually should, but they're selfish. So we're going to be looking at the chart. We always give you the 6 months, 1 year, 5, or max, depending on how I talk about the chart. So y'all know my motto, stay with me. So we're going to be looking at the key moments of the 6 month value. Actually, we can see here the 6 month value actually went down that 5% and they actually went up that 5%. So they still around the 238 55 shares. So that's not bad for the year total to date. I would say the key moments for here, it was at 214. Then they actually took a hit for a little bit of 216. Then they actually went up to 9%. Then they actually went back down at 210. So, they went back up there, but a lot of people invest in Amazon, but Amazon is not just one company. They ship, they deliver, they food, they do. Amazon is like the one-stop shop. So any avenue of Amazon that might be down, the other one was just going to bring it back up. So if they down in the shipping, they're going to make it in groceries. They down in the groceries, they're going to make it in buying their stuff online. They down in stuff online and making money with selling merchandise. They make it selling with merch. You see what I'm saying? How it actually goes up and down, which was a smart move by Amazon too as well. Interesting. So let's get under the hood of Amazon, man. Let's get into the financials and we're going to get into the cash flow, see how much money they're working with. Wow. The net income is $30.26 billion. It's about the largest net income I ever saw, me doing reviews. Very, very interesting. But your cash operation is $26.3 billion. So in between that, you got 30, so 7, 8, 9. So y'all $3 billion apart from what your operations is. So he put money back into the business to keep growing and growing and growing, which is cool. Don't get me wrong. The net income, what he doing? That's how you operate. You put more money to make more leverage. I think that's where Drewski got the idea from too as well when I was watching a little thing of him. As far as inventory, they got 1.62 billion. They took a hit, but they're actually making it back up for the inventory, for change of inventory. So they're making their site better, stuff like that, making it more avenue for other people to use. So take that into account. They're actually doing good with the company, I would say. I hate to say it, but Amazon is the thriving company that you want to run as far as Tesla, but hey, it is what it is. Let's see, cash from investing, they're in the negative, which I'm very surprised at this. How are you negative 64 by 21 billion? And you went up after that. So y'all are not investing. You just taking the cash and dumping it back into Amazon for fixtures and stuff like that. So yeah, of course you're going to be in the negative. You keep evaluating, keep dumping it and keep sharing it. So yeah, I can see that actually being a big ordeal for the cash in advance, but I wasn't seeing that being a capital thing to do as far as the debt issue. You have 6.62 billion and the debt and the long-term debt to repay back is negative 61 billion. So you actually got more to pay back than you was issued. So depending on what you're running the company outside of Amazon and what damages you're trying to create, or if not, do these drone simulators actually cut down on what you're paying, you're not paying for the unions and stuff like that. So y'all paying raw cash. So y'all taking a big hit on that too as well. So I can't really get mad at that. Let's look at the cash from financing. Yeah, 52.70 77 bill. Yeah, I can see y'all financing these warehouses and stuff like that. The free cash flow, I got negative. That's weird. Well, just like I said, their net income they put back in the company. So of course they're going to take a hit in the cash, but damn, 13.77 billion. Y'all have no cash flow. Y'all are just steady dumping the money back into the company and not making a profit. So remember, Jeff Bezos does not own the full shares of the full ownership of Amazon. He actually dispersed it. So he had a part, other person got a part, other person got a part. You know what I'm saying? So that's how Amazon is flowing like that. So of course they're not going to have a certified cash flow because there's not just one person running the company. So that's another thing too as well with Jeff Bezos situation. So it's way more deeper, but as context, I might do a series on that too as well in the future. But the net cash flow is not good. So we're going to jump into these balance sheets here and see what's really going on. This is where the nick and granny come to. Inventory, he got 36.53 bill. Inventory is stock, took a hit a little bit, but he's still there in inventory, which is very good. So the people that's supplying or what he's selling or what he's selling his own projects is, as far as Amazon, they're doing great as far as inventory. No problem with that. The total current assets. I don't know why that was so hard to say for me. 191. Well, Amazon 250. Yo, what's up, guys? This your boy Kool-Aid Man 100X. I want you to hit the link in the description below for my zero investment books. We have a quick sale going on for $7. Link will be in the description below or in the comments below as well, so you can get a chance to get the $7 deal and other things that you want to learn how to invest and take your investing to the next level. So I hope y'all enjoy. I'm gonna catch you guys there. Yeah, Amazon is the stock. That's how much the stock is. So basically, yeah, Amazon is his asset. So he didn't made that his asset, which is smart. So whatever he makes, he invests. He come back, he flipped the shares, all that stuff too as well. So total assets is always going to be fine as far as that situation. But the real nitty gritty is your current expenses. So now this is interesting. The current assets here. Prepaid expenses 6.7. God, bro. Your expenses is 7.20 billion. That's the expenses. Your total current is 53.67. That's occurring. This is what you racking within a year? Amazon a year? Oh, shipping, planes, yeah. Ooh, God, no, that's probably why you switched to electric trucks. It makes sense. You ain't got to pay for gas, but still, that's high. Long-term assets, 78. You dealing good. Took a hit, though. You was at 93. Took a hit for that 78. That's not good. Total assets, decent. Should be higher, but 96, that's not bad. As far as Amazon is running, I think it could be better, but overall, yeah. But y'all taking a hit on this debt and leases. Ooh, I mean, as far as you've seen Amazon, as far as the share place, because people are just, everybody's in it. So, of course, the stock value is going to go up because Amazon is a one-stop shop. So, everybody is dumping into Amazon. Shoot, even investors. So, Amazon ain't falling no time soon. There's no time soon. But you can see it actually making more of a expansion. They're always expanding. That's why the debt keep growing, leases keep growing. So it's gonna be a hit after a while. So let's jump into the earnings. The earnings, I already know Amazon making all greens, of course, man. Look at this. Oh God, look at these. 140, 60, 40, 140. I think the lowest they got was 134. That's the lowest, I believe. The highest, oh, look at this. They did heck of good in 2025. 213 billion. Their low is 181. That's still a good year. Crazy work. I got to give them to them, though. I ain't going to lie to you. That is crazy work. Let's jump into the bullish, see what actually the massive thing they can do as far as breaking this situation. Let's look at this. The bearish market, the massive 200 billion coupe's commitment pressures near-term free cash flow. That's why I said if free cash flow is not good because they don't have no cash. They keep expanding. They don't want to stick to one revenue machine. Like I would say a one revenue machine. This is my meaning. If you got one project and you package it up to just run by itself, that's what they should do. They got the market, they got this, they got that. Amazon got too much expansion stuff going on. That's why the cash flow is not making up for what they lose for as leverage cash. So they losing money, a lot of money, like tons. That's why they keep upping these subscriptions. which I think really won't make an impact of the debt they accrue, but expenses, so whatever. Rise serious question about the return on investment. See what I'm saying? The timeline, some analysts say is already trimmed, price target, the city complex concern, and the capital association with the overwhelming part of the AI infrastructure over the shareholders' return. The financial strain could weigh on the stock if it executes it further. So they need to make some money. They ain't got no cash flow. The money is not making it. But this is where we come to the bullish view. Amazon $200 billion plan to infrastructure 2006 strategy and they're capturing and suing the cloud demand. Now this is slick. Now they're going to use AI, right? This is for the sports events, stuff like that too as well. They're using AWS. AWS is supposed to be the global cloud service that they're actually going to be sharing as it brings in 244 billion of backlog. So 244 billion is a lot of money. Landmark deals, you know what I'm saying? OpenAI cloud contracts to signal investment will drive the AF. So they're banking on AI for the events like football, UFC, all that stuff too, as well. They use AI for all the numbers, stuff like that to use in that particular moment. You know, the commercial they be doing for that. So this is what their AI is capable of. So they're going to be expanding that. You see what I'm saying? You see, for the AI, for the long-term margin expansion, see what I'm saying? They're steady expanding. Look, Amazon's so fixated on expanding. They're really trying to become a monopoly, but the monopoly is actually going against them because they ain't got no money. They ain't got no cash flow. They steady expanding and accruing more expense to run the company Amazon. Just like I said, you got Amazon Foods, Amazon Whole Foods, the delivery, the 2-day shipping, this, that, Prime, book, audio book. They have so. Amazon wants to be the one-stop shop. Shoot, if they could put a DoorDash simulator on there, they can. They will. They probably already did because they actually got Whole Foods. Whole Foods is healthier, organic, stuff like that. People, and they up the prices for that too as well. So look at the expansions that they're doing as far as Amazon actually making them more deeply evaluated. So that comes with the risk that they're actually doing. So this is where I was just talking about the risk, the bullish market with the risk. So Amazon trades the PE above the minor retail. You see what I'm saying? Per average 21, look expensive, but simple. You see what I'm saying? But the model on Amazon is typically undervalued because approximately 447 shares versus the trade price. Yeah, they're taking a hit. They don't have no cash. They don't have nothing to liquidate from Amazon, but Amazon being Amazon, it actually invests itself. So everybody just, they didn't turn Amazon into the go-to. Amazon just to go. They have it. They have the system, but the system is not working against them. It's not working with them. It's actually ruining them. It's too much. So I don't know, man. Let's look at the consensus of Amazon. Amazon, they actually consider a strong buy. I already know Amazon is a strong buy, but 238, they're pretty high. And the average target price is 300 to 320. Just imagine investing $320 a share. I'm curious. Let's break out the calculator. You know me, I love breaking out the calculator. So what is that? 320 times what? Let's say 50 shares. That's $16,000. Now imagine that $16,000 take that hit from that 320 and drops. Let's say if it drops down to what? 201, 198, bro. How much money you gonna lose? I would not buy this company solely just for Amazon. If you got a lot of bread, if you got a lot of money, if you got a lot of tied up cash, yeah, you can do that. But you're still taking the risk of putting all your eggs in one basket with a company. I suggest you do it in an index fund or ETF or available weekly stock, which I will be getting into those future. I'm gonna start coming out with them daily, so be on the lookout for that. Turn this whole channel berry into that. So because I don't see anybody breaking those down either. So if you're looking for a company that you definitely want to invest in weekly, I do recommend going into Amazon weekly, but I will be breaking that down in the future. But overall, a company, yes, invest into it, but only do it with ETFs or index funds. Do not do this company by itself. You're going to lose money. So I hope you enjoyed the video. I'm going to catch you guys on the next one.